Welcome to Epic Stock Due Diligence. Please subscribe at youtube.com/EpicStockDD. Thank you.
Hey everyone, welcome back to another exciting episode of Epic Stock Due Diligence. Now this is 2020, so I'm back in 2020 to share some more videos. This video and all videos I'm sharing for entertainment purposes only. They should not be considered a recommendation to buy or sell a security. I'm sharing all contents within for entertainment purposes only. With that being said, let's go ahead and segue into the video. And something I want to talk about, and this is something I haven't really addressed within previous Epic Stock Due Diligence videos. And by the way, if you haven't subscribed, be sure to do so. It's youtube.com/EpicStockDD. But something I haven't addressed within previous videos is how did I become involved with stocks? So it started at an early age. At that point in time, I was mowing grass to make money, not riding a mower, but pushing a mower to make some money. And I'm like, this is fine and dandy that I can make money cutting little blades of grass. But what if I could take that money and multiply it by tens, 20s, hundreds, thousands, maybe tens of thousands? What if I could take that small amount of money and make it and turn it into something significant? So that's what turned me on to stocks. Now at that point in time, and I'm an older guy, so at that point in time, the online trading platforms did not exist, because at that point in time, the internet, as we know it today, where most anybody can have access to the internet, was not an option. It just didn't exist. And the tools that were available on the internet, there weren't any tools at that point in time for big board stock traders or penny stock traders. So when I wanted to buy a stock, and the first stock I bought, it was not a penny stock. It was a big board stock. It was a web browser company. You can probably look back and find one of the most popular web browser companies in the early days of the internet, and that's what it was. So it got me hooked. I'm like, I can take this small amount of money that was generated by cutting blades of grass, mowing grass. I could take that small amount of money and I could multiply it. And then once I won there, then I could just boom, 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 go into the next thing, the next thing, the next thing. And obviously the next thing for me, many years later, was segueing into penny stocks. Now penny stocks, and that's what we're going to talk about within this video, an introduction to penny stocks. Penny stocks are a different animal. Penny stocks are a lot more exciting, but with that excitement comes a heightened level of risk. Always expect to lose it all and then some. Penny stocks can be financially devastating. Look at penny stocks, and again, all my videos are for entertainment purposes only. This should not be considered a recommendation to buy or sell a security. I'm sharing this video for entertainment purposes only. With that said, the penny stocks are cool because they provide a unique opportunity. And again, this is just the introduction to penny stocks video. So check out my other videos as you want to, entertain yourself more in depth. So looking at the stock market, traditional stock market that you're probably accustomed to, especially if you're new to it. Maybe you've never traded a stock. Maybe you're just browsing the internet mindlessly and you're on YouTube and you're like, man, here's another penny stock video. Let me check it out. And I'm not here trying to sell anything, but if you do want to check out my book, expand this video's description and then click the link there and you can find where to order my book. Again, not trying to push my book, but if you want to check it out, there's a link there. So you've got the big boards. If you pop on your popular television network and you see that little ticker streaming across the bottom of the TV screen, it always made me feel excited when I turned it on and I saw those numbers. There were ups, there were downs, there was green, there was red. It was exciting because it was like a casino of sorts, because, what is, let's just say, fictitious ticker symbol XYZ, what's it going to be tomorrow? Is it going to be up? Is it going to be down? Is it going to be green? Is it going to be red? It's just the excitement of having something to watch throughout the day. Or maybe you're not that serious and you just casually check a ticker, check a stock ticker to see what the price is. Is it up or down? So, those stocks that you see on many of your popular television news channels, those stocks are typically what are referred to as the big board stocks. So boards like New York Stock Exchange, NASDAQ, American Stock Exchange, the big boards, the companies that are, larger companies, companies that report in a great degree of depth. But then when you get, and again, with the big boards, and there are exceptions, but with the big boards, the percentage increase is typically not as rapid. I mean, even your big companies that are listed on one of the big board exchanges, they typically, it may take years for them to, assuming they're going up, to achieve a percentage increase that many penny stocks often meet or exceed in a single day of trading, or maybe just a few hours of trading. So that's what makes penny stocks attractive to a lot of, and I don't call them investors, I never do. There's people that claim that penny stocks are investments. I do not. Again, penny stocks for me, they're a form of entertainment. And it's so we're going to segue now the conversation from the big boards, where most of your let's just say less risk tolerant traders may play. They may play in big boards only. But when you jump into penny stocks, you've got the over-the-counter bulletin board, the OTCBB. You've got the OTCQX, the OTCQB, and then you've got the pink sheets. And the pink sheets are the bottom of the barrel. So again, the OTC markets as a whole, they're a tier below the big boards that we just talked about. But within the OTC markets, you've got those three tiers, and the pink sheets are at the very bottom. What makes pink sheets so exciting, if you're looking for the real scandalous penny stocks that you've probably been searching the internet to try to find, what is a penny stock? Where do I find penny stocks? The sketchiest of the sketchy are typically going to be pink sheets. So what is a pink sheet? And again, this is an introduction to penny stocks, so I'll go more in depth within other entertaining videos on my channel. So subscribe and check them out, youtube.com/EpicStockDD. But the pink sheets are cool because they don't have all of the reporting requirements that a lot of the big boards definitely have, and even the top tiers of the OTC markets, the OTCQB and the OTCQX. The pink sheets aren't as heavily regulated, which this can be a positive and this can be a negative. From looking at it from a negative perspective, if something doesn't have to adhere to reporting requirements that are as strict, it could just be a flim-flam company, and there may be no money being made, and just because it's a stock, just because it's got a symbol, and it's a symbol that a trader could buy and or sell, potentially assuming it's not at no bid, but doesn't mean that it's of any value. But the other side of the pink sheets is that there's a lot of, due to the lack of reporting, there's a lot of opportunity there. And again, expect to lose it all, because that's probably what's going to happen. And this video is for entertainment purposes only. Again, this is not a recommendation to buy or sell a security. This is just for entertainment purposes only. With that said, pink sheets are unique animals, so we're going to look at a hypothetical situation here. And again, this is just for entertainment. But the lowest that a pink sheet can be listed at is 0001. So that's period 0001, a fraction of a penny. So without commission, imagine taking, say, $100 US. You're throwing $100 US, and you're going to have to put, the broker's commission on top of that. But $100 US, you're getting 1 million shares at 0001. It sounds like a huge number. That in itself is exciting. It's like, well, I've got $100. I may be able to get on the big boards. I may be able to get a few, a handful of shares. But if I go to penny stocks, I can get 1 million shares, man. That's part of the excitement. That's part of what attracts people to wanting to trade penny stocks. They feel like a big fish because instead of just buying a handful of shares with that hypothetical $100, they're potentially buying 1 million shares with that hypothetical $100. So it's just a degree of excitement that is hard to achieve with the big boards. So now let's look at that 0001 stock. This is just an example. Again, this is an introduction to penny stocks, so I'm not going to go into all the minutia within this video, but I'm going to provide just a high-level overview, and that's within the other videos where I'm really going to break it down and hopefully provide some even a greater level of entertainment. But let's look at that 0001 example. So there's two sides of a fence on a stock. Let's say this hand is the bid. Let's say this hand is the ask. So if I bought that 1 million shares at 0001, I was purchasing at the ask. If the ask is 0001, the bid on the left side is probably 0, meaning that I spent that hypothetical $100, I got my 1 million shares, but if I want to sell that stock immediately after buying, I can't because there's $0 on the bid. So in essence, I've thrown my money into a hole. There's no bid. But let's say hypothetically that this 0001.0001 price per share stock, let's say I bought it, I had 1 million shares, I was sitting on it, I had it, let's say I had it for 4 months, it did nothing, and then all of a sudden there's a press release. Maybe there's not a press release, maybe there's just some sort of perceived buzz among traders. It's like, oh man, check out fictitious stock XYZ, dude. They're coming out with, they got this, that, and that, blah, 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 blah. So there's several different things that can attract traders to a stock. So I may have bought that, stock, had those 1 million shares, went through weeks, potentially years of silence, and it was still at 0 bid, meaning that, my $100 is locked up. I couldn't sell it if I wanted to. But then a press release comes from the company, which with penny stocks, it's not like your big boards. There are a lot of press releases, especially with the pink sheets, that are pure fluff. Even if they come from the company, there's a good possibility that they're fluff. If they're not 100% fluff, the verbiage is probably crafted in a way to where it makes something sound big or sound important. But if you read it very slowly and you digest, you'll probably find, I'm trying to think of a good example of a fluff press release. And again, this is just made up. But let's say that this penny stock makes some sort of computer chip. And let's say that this penny stock releases a press release in regards to their current business activity. And they make a computer chip, and maybe the press release is crafted in a way to where it says fictitious penny stock, ticker symbol XYZ, has inked deal with insert big board computer chip manufacturer there. So, that may be eye-catching. That may seem to be significant. And even after reading that press release and digesting what it says, it may still sound significant to an uneducated trader. So for this reason, what I do with penny stocks, I only mess with sectors that I understand, and I deeply understand technology. So in this fictitious scenario, upon reading that press release, that official press release, I may find that, they're making this chip and they're in business with one of the biggest chip manufacturer in the world. But then when I read the details, I may find that even though they've got that deal for chips with that biggest chip manufacturer in the world, that upon reading it, there may be some fine print that just says, their deal didn't have anything to do with the processors. Maybe they're trying to sell them a new restroom cleaning product or something. I mean, just something totally unrelated. But just because the false perception was that it was some sort of chip deal with a big chip manufacturer that could imply rapid price per share increase, it catches a lot of traders that are inexperienced. The other way that a stock like that could receive attention would be forums, and a bunch of traders get together. They associate a lot of hype with a ticker symbol. And again, using this fictitious ticker symbol XYZ that's at 0001 on the ask. You could buy it, but you can't sell it because there's no bid. A bunch of traders may come in, put in a, craft a bunch of neat stuff. Oh, I've done my due diligence. I found this, and that. Officer so-and-so previously was connected with successful company ABC, fictitious company, and then they're doing business with so-and-so that was linked to this successful product launch on this date. Trying to paint the picture of something coming together that, that this seemingly worthless penny stock, fictitious symbol XYZ is for some reason going to start receiving a lot of volume and increase in price per share, which to make money with a stock, there's always got to be volume, because if people aren't buying and or selling, a stock's not going to move. That price per share of that stock is not going to move unless there's volume, because it's volume, people trading, buying and or selling, that causes a stock price to increase and or decrease. Because if there's, the best way to visualize this, if I've got this remote control in my hand. So if I just hold this remote control in my hand and look at it, it's not going to turn on the TV, it's not going to change a channel, it's not going to do anything. But once I start pushing the buttons, I can do all kinds of stuff with it. I can move the channel up, I can move the channel down, and I can even turn it off. So, that's kind of looking at like that. That would be volume. That would be an example of volume, because just holding a tool in my hand, if it's not being manipulated by people or multiple people, it's not going to do anything. It's just going to sit there. It's not going to change. The TV channel is not going to change. Just like a stock, if there's not people buying and or selling, there's going to be no volume. And if there's no volume coming in, it's not going to move. So, that's another way that people often take a seemingly worthless stock and try to create buzz. Now, what they may do on top of that, and again, there's people that play stocks of all different financial levels. I mean, there's people that play stocks that have won big, and for them, maybe $1,000, $10,000, maybe even $100,000 is nothing to speculate with. So it's easy for certain traders, especially traders that have been successful in the past, to throw what most people would deem a large amount of money at a stock to create volume and be like, oh man, I'm missing the boat. So in that scenario, someone, or maybe not one person, but maybe a group of traders, say there's 10 people, and say those 10 people were all financially successful and they had the luxury of being able to speculate. Well, if you've got one person that's financially successful speculating, that still creates significant volume, especially for a 0001 stock. But if you multiply that times 10 or so, you can create, traders can create a frenzy. And the volume's going up. This stock was, let's just say hypothetically, it was 0001 on the ask at the beginning of the trading day. It's past noon, right before power hour, right before the market gets ready to close. And this thing is already up. Let's say it's gone from 0001 to 0.02 to 2 cents. Huge percentage increase. Huge amount of volume. And people at that point, especially your inexperienced traders, they feel that they may be missing the bus. And then people that are in, they're potentially thinking, well, I'm up this much. The bid has risen from zero, the fictitious $100 initial investment when you couldn't sell because the bid was zero. But now your million shares that were $100, now it's at 2 cents. But if let's say the ask is 2 cents, the bid may be a penny and a little bit over a penny and a half. That all fluctuates. But it's like, man, should I get out? Should I get out or should I hold? So penny stocks are not for everyone. And, in that scenario, it could be a quick, what's referred to as a pump and dump. And we'll explore the pump and dump technique in more depth within another video. But at a high level, a pump and dump, where we were using the trader example, trader or traders that were gobbling up this fictitious stock and creating the volume, and then causing other people to, because people watch volume. That's one of the best ways to find a penny stock that's taking off. Sort by volume, low to high. Find the ones that have a surge of volume. And if you see that volume, then get in and really really try to dissect what's going on and see, is there a material event that seems to be associated with this? Is there a press release? If so, is that press release somehow fluff? Always go at it and assume it's fluff, because more than likely it is. There are exceptions, or is it just something that's been run by a group of traders and they're in essence faking that volume? So, and the other thing to remember is that in the case of traders banding together and creating a surge of volume for a stock, they're not potentially only making money when the stock goes up. So most often what will happen if it's a pump and dump, those traders will they will wait till it gets to what they feel is the peak, and then other people started buying in, so the bid has risen, so they're way above their original point of entry. So then often what they'll do is dump all, if not most of all, of that position. And and then there's what's called shorters, and that's a more advanced topic. But people that short have the opportunity for infinite financial loss. But shorting at a high level is that traders are going in to a stock with the expectation that the price per share is going to decrease. But since they're shorting a stock, again, more in depth in another video, but since they're shorting a stock, in essence, they're trading with the broker's money, so it's not their own money. So they've got to, it's a more complicated thing, but I never short, and the reason I don't is because of the opportunity for potentially infinite financial loss. At least with trading stocks with the expectation they're going to go up, not with the broker's money, with my own money, my expectation is that, okay, if I put in this fictitious $100, all that I should be able to lose is the $100 plus the small commission, whether it's $8, $10, whatever, varies among online brokerages. But yeah, that's another thing. So see, you can already start to see how this is exciting, and the people that found that stock and potentially sat there for 2, 3, 4 months, it doesn't matter. If they were in at 0001, it doesn't matter if there's a legitimate material event that's occurred and the press release is not fluff. It doesn't matter if the press release was released and it is fluff. It doesn't matter if traders are injecting all of this volume to make the price per share increase and create all that volume to get the stock on other traders' radars, whether they're experienced traders or newbie traders. It doesn't matter if someone was in at the base and it's up. That person probably has the opportunity, assuming there's enough shares on the bid side of the fence. That person probably has the opportunity to make a significant amount of cash. So, imagine, and this is totally hypothetical, but there have been some that have done this. Imagine that a stock runs, this hypothetical example, XYZ ticker symbol, got 1 million shares for 0001 price per share, spent, $100, hypothetical $100. Let's say that stock, without a reverse split, and splits we'll discuss in another video, but without a reverse split, let's just say this stock, there's a stock that, again, XYZ, there's a press release, and it turns out the press release is not fluff, and it turns out this stock flies. So it goes from 0001 to, let's say, $1. Well, that $100 at that point, if that stock goes to $1 on the ask, that is $1 times 1 million shares. And the bid is typically just a little bit behind the ask. The bid is typically going to be a little bit lower than the ask. But again, with the penny stocks, there's often what they refer to as a big bid-ask spread, meaning the difference between the bid and the ask. So with the penny stock, if it's trading at $1 on the ask, that bid, and again, this is just all fictitious stuff, but that bid could be as low as 80 cents. But let's say that bid was as low as 80 cents, and there were enough market makers, which are the financial institutions that make up the bid and the ask side of the fence. If there were enough market makers on the bid to comfortably cover that 1 million shares, and there weren't enough traders wanting to dispose of their shares, to sell their shares at that point in time, it's possible that those 1 million shares could execute on the bid that hypothetical 80 cents, resulting in around an $800,000, right around just a little bit less than $800,000 profit, because you got, you had that hypothetical $100 in, you had your small commission, $8, $10, whatever it is with your broker on top of that. So let's say $110. And then this goes up to 80 cents on the bid. You sell your million shares at 80 cents. You got your $800,000, and of course your initial investment of $100 plus the up to $10 or whatever commission that the online brokerage may charge. So you can see in this example why people are excited about penny stocks. And again, this is all hypothetical, but it has happened, and it does happen. Not every day, but it's a trying to think of the best way to put it. Again, this is all for entertainment purposes only. Should not be considered a recommendation to buy or sell a security, but it excites me because it's a thing that a lot of people can't grasp, and nobody's an expert with this. I mean, penny stocks in particular, big board stocks are heavily manipulated, but penny stocks, especially the bottom of the barrel that we're talking about, the pink sheets, they're so heavily manipulated. But then there's reverse mergers, and this is another. Again, this is just an introduction to penny stocks. I'm not going too in depth with any of the pieces, but there's reverse mergers, and to explain a reverse merger in beginner's terminology, think of it this way: if you've got a company and you want to go public, you want people to be able to buy your stock. There's a traditional route of going through one of the big boards, American Stock Exchange, NASDAQ, New York Stock Exchange, but the listing requirements are probably too much for even some of your larger companies. So there may be a company, let's just say some sort of startup company, that may not even be able to afford to do the over-the-counter listing. So they may be like, well, man, they may have a legitimate product or service, and they may want to become publicly traded. So often what those companies will do is they'll perform what's called a reverse merger. So at a high level, they will find let's just say a pink sheet that's been inactive for several months, maybe many years, but doesn't have a tainted past. Maybe it's a stock that was once traded, but it never really went anywhere, and it's just gone dark. And being on the pink sheets, it's able to be dark because it's not subject to all the regulations like the higher level over OTC markets, and then also the big boards. So what companies often do, they will pick up that fictitious ticker symbol, whatever it may be, let's just call it ABC, and they may pick it up and then reverse merge. So that ticker symbol that was once a dormant ticker symbol, potentially 5-6 years, no volume, no nothing. Maybe there was maybe there were a few pump and dump attempts along the way, but for the most part, it's just been a silent shell. Those companies that are potentially legitimate and want to go public and trade stock, they can reverse merge. And in this example, looking back at fictitious ticker symbol XYZ, let's say that became a merger play. So Jane Bob or Joe Bob had put in that $100 and they sat on it. Let's just say they sat on it for a few years, and then that particular ticker symbol was picked up, and it became a reverse merger play. Reverse merger plays often rocket the price per share of a penny stock. So it's exciting. I mean, it makes me excited just to think about it, and there's so much that I could say about penny stocks. I mean, if you're like me and you find entertainment in unique ways, this is a fun playing field for a lot of people, because whether you're simply just watching it, sit down and write down a few ticker symbols and see where they are a few hours later, because again, penny stocks move rapidly, second by second, minute by minute, throughout a trading day, huge percent increases and or decreases. Very common with penny stocks. So, just sit around and look at it and it's kind of a fun, one of the things that I did in the beginning, again, coming from big board stocks initially that didn't have the, the rapid price per share swings. I had to educate myself when it came to penny stocks. So, the way that I conditioned myself to think more rapidly was to look at these after the fact. A lot of stocks, penny stocks that had run hypothetically from 0.001 to 30 cents. Those sorts of plays, I would get in and look at the OTC market, sort by volume, do it a few times a week and just pick those stocks that really ran. And then I would go into forums and I would research there, again, tons of fluff. But there's often information in there that one can use to connect the dots, perform your own due diligence, but to try to determine what caused that surge of volume and what caused that stock to rise and or decrease price per share value rapidly. And by doing that, I was able to, in my mind, take notes and figure out, okay, well, this was what caused this stock to increase price per share rapidly. This is what caused this stock to then be dumped to, the price per share go down rapidly. A lot of the times with penny stocks, you'll hear them referred to as pump and dump, and that's what you're going to find in most of these. But just because it's a pump and dump doesn't mean a bad thing, because if someone, and again, it's a matter of luck, but if someone is in a pump and dump at a low level, and then they get out at a high level, they still have the opportunity to really see some big gains. But it's one of those things. It's whether you find the entertainment in simply watching, and that's what a lot of people do. They just watch it and learn. It's a great alternative to watching a TV show or playing a video game. I mean, what's more exciting than seeing a penny stock, rise from sub-penny to multi-penny range, and then going in and performing the detective work to try to decipher what caused that. So it is fun stuff. And this introduction to penny stocks video that you just watched, I just wanted to put it not all out there, because there's no way to put it all in one video. But I just wanted to put all this out there in 2020, because I'm going to be posting a lot more videos, and just kind of get people thinking, I didn't think penny stocks did all that, or I didn't think that's why a penny stock increased in value so rapidly. They're heavily manipulated. So for that reason, in this introduction to penny stocks video, I focused upon the manipulation. I didn't go after a legitimate company saying, this is a penny stock, and your legitimate increases in a penny stock from, say, a company that has a verifiable press release that contains accurate information, that then whatever is stated within that press release, they actually executed and they actually made X amount of dollars because of the product and or service. That's very rare. Again, most of these gains are the product of manipulation from traders, creating that volume and creating the fear of missing out so that other traders will follow, and then they can dump their shares and run off with the profits. It's created by fake press releases. You've got companies that are, the leadership of these companies they're not always the best people in the world. They may be putting out press releases and with the intent to cause people to want to buy it, and then they just run off with the money. They'll reverse split and run off with the money. So I mean, there's all different types of things here, and I mean, I'm not. Again, this is just for entertainment, but it's easy to see how entertaining penny stocks could be. But I hope you enjoyed this video. If you did, be sure to like this video. Subscribe to my YouTube channel, youtube.com/EpicStockDD. Again, not pumping my book, but if you want to check out my book, expand this video's description and click the link there. You can find the link to my book. And yeah, let's have fun talking about these. And I'll try to get some live shows on the calendar here soon. 2020 for Epic Stock Due Diligence is going to be the biggest year yet. So I appreciate your viewership, subscriptions, and hope to see y'all again soon. Leave some comments down below. Y'all have a good day. Hey everyone, I hope you enjoyed this video. If you did, be sure to subscribe to my channel, youtube.com/EpicStockDD, and ring that bell icon when you do, and that'll notify you whenever I post another video. Thanks for your viewership, and y'all have a good day.